Welcome back to my property investment education series. I'm Rod Pearce. Today in chapter 2.6 as we take a deep dive into analysing property types and investment options. Analysing property types and investment options is crucial for making informed decisions in the property investment space. Each property type offers unique characteristics, potential returns and risks that we need to consider. Here's a comprehensive guide on how to analyse different property types and property investment options effectively. And by analysing property types and investment options comprehensively, property investors can identify opportunities that align with their investment goals, risk appetite and tolerance, and their financial objectives and long-term wealth creation plans. Conduct thorough research, assess the potential returns and risks, and seek professional advice always when evaluating different investment opportunities in the real estate space, from your legal counsel, from your accounting counsel, but you need the professional support before you make that final decision. Residential properties. Consider single family homes, probably the easiest entry point for property investors wishing to embark on their property investment journey. Single bricks and mortar homes, owner-occupied basis, nothing quirky, nothing elaborate, standard run-of-the-mill, bricks and mortar owner-occupied single-family homes is the most sought-after base entry property investment strategy. Typically offer stable rental income, lower maintenance costs, and easier management compared to multi-family properties or other more sophisticated property types. Ideal for beginning investors and those seeking passive income with little risk. Never no risk, but little risk. Consider multi-family properties, duplexes, triplexes, apartment buildings, blocks of units. They all provide different opportunities for higher rental incomes, economies of scale, and portfolio diversification. Consider factors such as occupancy rates, tenant turnover, property management, and the efficiency of being able to manage that property if you wish to do it yourself or embark and engage a property manager. Consider commercial properties. Office buildings offer longer term lease agreements, stable cash flows, and potential for value appreciation. Analyse factors such as tenant creditworthiness. What type of business are they in? How long have they been in business? Lease terms, market demand for their products or services that they offer. What is required to support the office space as far as fit outs? Consider all of these items when you're considering office buildings in the commercial space. Retail centres. Evaluate the tenant mix, foot traffic, anchor tenants as we call them, large corporates, and lease structures to assess income stability and tenant retention. One of the risks with commercial is you may be able to get longer tenants, but there may be greater exposure to vacancy because of the type of business that they're in. What service and goods do they provide? How do they support the local market? How do they support at a macro level? Are all considerations to understand the long-term creditworthiness of tenants in the commercial space. Industrial warehouses. Consider factors such as location, access to transportation routes, ceiling heights, egress, ingress for large transportation hubs to be able to move goods in and out of the warehouse facility. Consider power considerations, single phase, three-phase powers are all considerations that industrial warehouses may consider as necessary, but there may be an infrastructure cost if you're looking to purchase an industrial warehouse, factory, whichever, that doesn't have that infrastructure yet. Not only is there the capital outlay to buy the site, but there could be additional fit-out improvement requirements that may stress and place additional or inappropriate demands on your cash reserves. Specialised properties, student housing. Assess proximity to universities, enrolment trends, rental demand, migration levels, property management requirements in student housing markets. Senior living facilities. Evaluate demographics, ageing population trends, healthcare infrastructure in particular suburbs, and regulatory considerations in senior housing markets. A specialised field, absolutely. Vacation rentals. Analyse tourism trends in a particular area if you're looking to invest in a seasonal vacational rental. Understand the occupancy rates, understand tourism rates, understand the regulatory environment in which tourism operates, and the risks associated with that if tourism is stopped. And we all know what's happened in the last few years with COVID. Certainly impacted a lot of people, albeit unfortunate. Understand property management logistics in vacation rental destinations. Some better, some worse. The cost of cleaning, the cost of management, the cost of repairs, the cost of insurance. They're all considerations to make when we're talking about specialised properties. Healthcare properties. Consider factors such as population demographics, healthcare demand, proximity to medical facilities, regulatory compliance when investing in healthcare real estate. All play an important role in the viability, long-term viability, to be able to deliver you the returns you want to help you achieve your property investing goals. Development projects, land acquisition. Evaluate factors such as location, zoning regulations, current. We don't really know too often about the future ones because that's an unknown, but definitely we can only make a decision in today's current environment with the zoning regulations that we're having as a part of the planning scheme. Understand the land use restrictions, the infrastructure availability, powers, water, gas, etc. And a development feasibility when acquiring land for development. And that could be just simple land subdivision, what we call as a battle axe court. It could be as large as buying a multi-acre site. They're all considerations that we need to make if we're talking about a land acquisition and the subdivision of that land. Construction projects. Assess construction costs. Very, very typical and topical today. We've gone through a huge cost of an increase of construction, and we see that probably continuing for a period of time. Hopefully it'll settle down. But understanding those construction costs in the context of the permitting processes and the timelines to hold properties whilst we're going through the project design phase. Understanding the timeline, it's important to look at planning, to look at the construction and the holding costs and the market demand that may change during that period of time. And always we've got to consider the exit strategy when we're doing the construction project. Are we constructing to hold? Are we constructing to sell off in part or in full? With regard to these development projects, are all important considerations. Value add opportunities with regard to construction. Look for distressed properties, underutilised assets, or properties with renovation potential to add value and maximise returns through strategic improvements. I know personally that you do infills, major infill, brand new property at the back, renovation at the front. It's a common strategy. Look for those opportunities. They will deliver good outcomes if managed and researched correctly. Different types of investing can be through real estate investment trusts. If we don't have the capital or the capacity or the risk tolerance to take on board direct projects, then there are other means by which property investors can take a piece of the property investment, albeit in an indirect manner. Consider investing in publicly traded real estate investment trusts, or called REITs, which offer diversified exposure to various property types and geographic regions without the operational responsibilities of direct property ownership. Analyse performance, dividend yields, asset allocation, management expertise and costs and risk factors when selecting these types of investments. Another consideration for investing is real estate syndications or partnerships. Participate in real estate syndications or partnerships to pool capital together with other investors and assess larger investment opportunities such as commercial properties, development projects or multifamily assets. Evaluate the track record, of the people within the syndicate. Understand their record of experience and alignment of interests with the sponsors and syndicates, which consider participation in real estate syndications. You may not get on with everybody, and that may not be a satisfactory strategy for you. Crowdfunding platforms, another one current today. Explore real estate crowdfunding platforms that enable investors to invest in individual properties or portfolios with relatively low capital requirements. Research platform and reputation and due diligence processes with investment opportunities, understanding the fees and regulatory compliance before investing through crowdfunding platforms though. That was another long session, but an important topic. Next, we'll continue the deep dive into emerging markets and growth areas. I hope you're enjoying the series. We'll see you soon and happy investing. Bye for now.